Have you ever had fear, doubt, or confusion within your trading? Analysis paralysis that leads to physical paralysis. But how do you actually fix these issues? And I'm not talking about a band-aid, but a permanent solution to the issue. What you need are signals that can lead to trading setups. And when that setup presents, having objective rules for entry to allow you to enter in based off of market behavior that occurs over and over again. Now, my entry criteria is very simple. It's nothing special, but the sequence of events that need to take place before I actually enter a trade are very specific. So make sure you watch all the way through, so that way you don't miss a step and have some sort of unnecessary misunderstanding. In fact, the steps that you see up here on the screen right now is my entry criteria. It really is that simple. However, I do need a signal and the conditions to be right for a setup in order for this entry criteria to be truly effective. So let's start to break things down. I'm going to start up high and we're going to get down low. Looking at this is from the past week on the NASDAQ. This is the opening range for the week. Monday, high and low. And on Tuesday in the Asian session, they have broke down and made a lower low. That's an opening range breakout. Asia has created a range, which is also the opening range for that day. And in London, they have extended that opening range lower, making a lower low. And coming into the New York session, breakout, pull back, and looking for continuation based off the fact that we have an opening range breakout for the week and also for the day. Now, with this certain scenario, this certain setup that I am looking for, making lower lows and lower highs, one of the things that you can look for is 3 levels of rise. That gives you extra confluence to the trade and optimal risk to reward. Now, when this market came down at the end of London and went back into consolidation, notice how they went into consolidation at this level. This is a 100 pip box if we're referring to Forex, and this is at the 75 level. So there is a peak formation at 75, which gives me the ability to measure up from that level 3 levels of rise. Now, those 3 levels of rise don't really mean anything if the market were to just keep going. However, if it does not keep going and they start to provide you with signs and symptoms, I can start to look for my entry criteria based off the signal and the setup that is presenting. So from this, we have level 1, double zeros, level 2, 25, and then level 3, 50. Now let's take a look at the New York session, and this is a 1-minute chart on the NASDAQ. Coming into the New York session, they had a large consolidation that has spiked both sides of the range. And just prior to the 9:30 opening time on this pair, 9:30 opens up after making a lower low. So they spiked the low first, triggering in shorts, and then they spiked the high, triggering in longs and stopping out everybody who was short early, but they had the direction right and they have just timed the trade incorrectly. So after they have spiked both sides of the range, they come back down and engulf that 9:30 time, allowing me to enter into the market. But let's put this into perspective as far as the actual entry criteria goes. If you refer back to that first slide where I said, hey, this is my entry criteria, yes, it really is that simple. I have a signal. I have a setup that is presenting. And now my entry criteria is beginning to play out. I have a lower low break in structure. Remember, that was the first step. The second step is I need 3 pushes back up into the high, which they present very cleanly here. Push 1, push 2, and push 3 back to the high. And then I need an M or a W to be engulfed. This is a very large M that gets engulfed right here back down to the low, allowing me to enter in above 75 where that previous peak formation was, and allowing them to extend the low of the day 25 to 50 pips down. Of course, this market continued to drop further than that, but that is what the setup called for me. And I took profits after that 25 pip extension of the low of the day down here at the 25 level. And just for reference, this is what it would have looked like on my broker as I was taking the trade. You could see me entering in just above that 75 level and scaling in as it was falling. I personally scale into all of my trades because I don't like to just enter in at full size in one area, and then if it were to maybe not work out, maybe they wanted to stop hunt one last time, and another 25 pip stop hunt or something like that. Now I'm in on full size and I have to be 25 pips and draw down on full size. Me personally, I like to enter in as it is confirming further and further so that way I can manage risk a lot easier. As always, with all of my videos, the link to this slideshow that you're looking at right now is in the description below. It's free. Go grab it. It's yours forever to download, print off, or just review. Bit of a review. You're going to start to see some very repeatable things. This is the Euro JPY 5-minute chart. There is a peak formation on Monday. That is the opening range for the week. Then from that level, they went up level 1, level 2, and level 3 coming out of the double zeros, the 100 pip box, up into level 3, where London had actually put in a peak prior to the New York session opening. And then New York opens and goes vertical back up into that level 3 area. And then down on the lower time frame, you're going to see exactly what I am talking about. I have a signal or a setup that could possibly be presenting. I am looking for it. I am on the hunt. And I just need my entry criteria to start to play out to allow me to enter in on this trade. So as the New York session begins, and we are climbing higher and higher, they're making higher highs and higher lows. And my job as the trader is just to watch structure to see if my entry criteria is going to play out at that level. Like I said, they could just keep going. It could be an opening range breakout, and Tuesday does an expansion of that range, starts to do a range expansion of that range, and starts doing 3 levels outside of that breakout. That could happen. But if my setup starts to present instead of that happening, then I have a setup. And I just need my entry criteria to play out for me to enter and manage that trade effectively. So looking at this, they're making higher highs and higher lows. And then the market made this higher high right here, which confirmed this as a swing low. Then it comes down after 9:30. And makes that lower low, trades back up into the high without breaking it, and then breaks back down. Now, it does not break back down necessarily below this low, but it just traded back down into the low without going lower. They've left a gap there to get people to start going long back up into the high, and then they don't break that either. Now, I have this covered up right here, but there is no M or W. I'm looking for a short, so it should be an M anyways. There was no M right here. It was just an A top, so that's not part of my entry criteria. However, they do a 1, 2, and 3 back up into the high after a lower low, back down on the inside of the daily range after 3 levels of rise coming off the low of the week for that little M. This is an up, down, up, and then an engulfment of that M after the lower low. After 3 levels of rise, we're at the high of the day for the short trade back down towards the low of the day. Just to make sure that I'm going slow enough, the higher high and the lower low is step 1. That is the break-in structure to the downside. Step 2 is always 3 pushes back to the high. If you want more about 3 pushes, I do have a 3 pushes video for more objective ways of viewing it. Push 1 and 2 and 3 back into the high. That is step 2. Step 3 is once they create that double top or that little M. This is a shortened M at the high of the day. That is step 3. And then we have the neckline of that double top engulfed, allowing me to take my first entry. Hammering home until I am blue in the face. The signal comes first. And then, based off that signal, the setup might present. So these are some of the signals that I would be looking for. First red, first green, inside days, 3 days of breakouts, 3 pushes outside of the opening range, the 3-day cycle, day 1, 2, and 3, and then heartbeat patterns, sometimes referred to as day 0. Then following the signal comes the setup. Conditions based off the signal that line up correctly with the signal that allow me to enter a trade based off of my trading plan. Some of those setups can include 3 levels of rise or fall, a high of day, low of day trend trade, or reversal, opening range breakouts, or a failed breakout of the day. So an Asian session failed breakout. I'm looking for short, long squeeze, and heartbeat patterns to show me or tell me on the day what I am looking for. I have a signal. It tells me what to look for. I have a setup. Does it confirm my signal? Yes or no? If it's no, I look elsewhere. If it's yes, I continue to watch for my entry criteria, which comes after both of these things. Pair selection can be very stressful. I have a basket of about 10 to 11 pairs, and based off of those, I have to narrow it down. Now, me being a New York trader, I'm going to select pairs that move and provide very consistent setups in the New York session, such as the American indexes, the NASDAQ 100, US 30, S&P, gold, oil. Those are things that consistently provide me setups and signals for the New York session. But if you trade something like Asia or London, you might need to change up your pair selection a little bit. However, I come into the day with that basket, and then I have to narrow it down, because if I look at more than 3 or 4, my brain can't process that, and there's no way that I would be able to effectively trade looking at more than 3 or 4 pairs a day. So how do I do that? I look at the weekly template, my signals, and my 3-day cycle. These 3 points will help me to take the list from 10 to 11 down to 1 to 4, and that's what I'm going to do on the day. Then I have to frame my day. Based off this new list of 1 to 4, when the new day begins, my thesis might change due to how I frame the day. Just like today on gold, today's Friday, we had a first red day yesterday, and there was a great trade, Asia-London. But then it went vertical in New York. Everybody's still trying to short, but the trade was in the prior 2 sessions. And if you would have just framed the day, it would have helped you significantly. So let's take a look at this pair right here. There was a large pumping day. And then on Monday and Tuesday, they consolidated inside of the opening range and broke down on Tuesday, giving you a first red day. Now I have a signal. And on the following day, I need to be able to look for the setup. There was a trade in London after a high of day stop hunt, and then the trend trade down after a first red day. Fantastic trade. However, if I came into New York still looking to trade short, if I would have just properly framed the day and noticed that they have came off of the low of the day in a peak formation, they have triggered the previous day's low, which is right here, and they have put in a peak formation. This is a low, down, up, down, and then engulfment. That's a W at the low of the day, and they've engulfed back up to the upside and started working that level. Opening range for the day, initial balance for the day, they're back up on inside of the previous day's range, and they are going vertical back up through the high. This was a first red day trap. If I didn't trade the previous 2 sessions, New York was the reversal. So looking at this pair, if I came into the day with a buy low thesis, whether it be, first green day, maybe it's day 2 of the 3-day cycle and I'm looking for a trend trade, whatever it may be, this might be the best pair to watch. Not because, hey, New York session went vertical in hindsight, great. But what happened to the left of New York beginning? Asia was the opening range. They've triggered the previous day's low. London has gone vertical and made a higher high. So opening range, breakout, pullback, opening range, initial balance, they've made a higher high on the day. Then they've traded back down into the low, and then created a large W. There's a smaller W, a part of a larger W that engulfs right at the beginning of the New York session. So opening range breakout, pullback, and then trend continuation on the day, back up towards previous day's high. I just want to reiterate these times. Asia is from 8 p.m. to 11 p.m. Eastern Time. London is from 2 a.m. to 5 a.m. Eastern Time. New York is from 8 a.m. to 11 a.m. Asia is my opening range. London's my initial balance. And coming into New York, I can either look for a reversal or a trend trade based off of what has happened in Asia and London, and based off of what has happened for my signal day. The signal gives me the setup. If the setup presents, I take the trade. Now, this video is supposed to be about entry criteria and having a solid plan going into a session with objective rules for entering. So let's hammer home some examples. Opening range high, Asia. They're making higher highs and higher lows in a down moving market. The higher time frames are going lower. They start pumping up at the beginning of London, making higher highs and higher lows. You can see the little 2-candle pullback right here, and they continue to go higher. Notice the numbered level. Then they make a lower low and pump it back up 3 times into the high, and into the high before breaking down. There's a descending triangle to allow you to enter in to this market. There's an M, up, down, up, and then the engulfment. Even if you got in a bit early, you used to have very little risk on this trade to allow it to go 25, 50, or 75 plus. Here's another London example where they're making higher highs and higher lows. There's the Asian session opening range for the day, and you can see that the high basically is at double zeros, and then they're making higher highs and higher lows. So there's a high, they go higher, confirming this as a low, and then coming into the session, they actually make a lower low. They pump it back up 3 times, push 1, push 2, push 3, and an M at the high of the session. Whether you entered there or not, they give you a lower low, and then they continue to give you entry opportunities. Lower low, 3 pushes back into the high, push 1 and 2 and 3, little descending triangle that turns into a larger pattern. Coming into the second hour of this session, you can see what time it is there. It's almost 3 a.m. Eastern time, to allow you to enter in here or here with very little risk and a decent reward, 25 plus. Another example, Asian range. London opens up and goes higher, makes a higher high. And then coming into the second hour, they go higher. The market makes a higher high. There's the high, there's the low, goes higher, 2 candle pullback, goes higher again, confirming a new low, and then the market makes a lower low in that second hour. Pumps back up into the high, push 1, 2, and 3, up, down, up, then the engulfment back down to the downside for that entry opportunity for 25 plus on the Euro JPY. So in reference to steps, markets making higher highs and higher lows, break in structure back down to the downside, made a lower low. Step 1, 3 pushes, push 1, 2, and 3. Step 2, up, down, up, and the engulfment of that M. Step 3 for the entry after that engulfment for step 4 and the follow through. Now I'm managing the trade. I hope this video has provided some kind of clarity and a more objective way for you to enter into the market. If it has, hit that like button, subscribe to the channel if you have not already. You'll enjoy the rest of your day and your weekend. Bye-bye.